Well, good day. Ira Epstein with your metal market update. And this update is for the evening of Tuesday, the 28th of June, 2022, 5:40 p.m. Central Time. You know, I think I introduced the last video as the metal update also. It was the financial market. I don't want to redo it. I did a pretty good job on it, so the heck with it. In any case, as we're looking at these markets, the gold market's trying to figure out, can it get another level down to challenge the 1800 level? That's basically the story that is going on through here. As for the rest of the metals, even with them saying in China, hey guys, if you come visit us, you only stay in quarantine half the amount of time that you did before. The market took that at first to say, oh, and I saw it worldwide. The market's going, China's coming out of their zero tolerance policy. I'm not sure I buy into that. But I don't buy into so much of what they're saying. Today, we're seeing that the big vaccine companies, Pfizer, Moderna, people, they're coming out with their new fall variant that will fight the newest variants of COVID. The older variants have mutated 30 times the original variant. So now you need the new drug. But what they're also telling you got to read between the lines, is we're in for another wave of COVID. What's that going to do with the zero tolerance in China? I'm nervous about that. They keep that going. We're already in June. You're going to be talking about this in September. It's not that far away. We're actually almost going to be in July. And if we get another wave, are they going back in China to closing down all their big cities? I don't know, but I'm concerned and I'm thinking about that in a big way. Do I think that this new variant's going to come on? You can count on it. Does the flu come each year? Absolutely. This virus is smart. It mutates. It looks at just the way everything goes. We're outside right now. It's not so bad. Although they've taken Chicago and we've been gradually climbing from low to a medium amount of cases. We're at a high alert now in Chicago. So we're one step away from the masks going back on everybody. This is summer. Everybody's outside. Pay attention to what is going on. A lot of people just don't. Dollar's been getting strong, currency's on the weak side. But as we look at the gold market, it's down about 0.5% for the week. It's not down that much. It's having a very difficult time getting through this whole level. I'm so inclined to tell my subscribers, just cover your shorts, enjoy the 4th of holiday. I'm very, very close. Might be better off putting a straight stop on the market, but I'm looking at it and I'll show you why I'm thinking that. Here we are in a market that I think is still a lot of noise. From the low here to this high. Do you see that? You've really just been drifting around. So basically you bottomed out in May, you peaked out in mid-June, near 1870s. You've fallen back and you got what I call a mess of a chart. It's really not done a lot. Yes, within the mess, you're downtrending. You've got lower highs, lower lows. That is bearish. You'd have to get back over 1840, 280 to negate the downtrend, but you'd be giving up a lot if you're short of what you made in this. That bothers me. What else is good? What's good if you're bearish is I watched the 18-day average get underneath the 200. You see this right here, this gray line? That's your 200 going across there. So as that got under it and the market rallied back into those two, I was telling my traders at least, hey, I think the short side's where the probe is. The original stop was right over that high. But now I'm nervous, all right? I'm nervous because you're pretty close to the lower Bollinger Band and you're oversold. It might be time to leave some scraps on the table for the next guy. You're either going to embed for a big leg to go down and try to crack through this, or you're going to get and go back to that 18-day average. You're going to kick yourself going, I got that $20 profit. It's going to be up to you, but I'm just telling you how I feel about it. In the gold-silver ratio, silver's still not looking good. The higher this number goes, it means you need more ounces of silver to get an ounce of gold. Silver's an industrial metal. If it doesn't have value here, what's that recession doing? What are all these problems? For those of you that don't get my full newsletter, this is my full subscription that I write. I write a twice daily newsletter. I devoted tonight to the problems again in Los Angeles and in the ports right around California. What is going on there? I don't know if you realize how many trucks there are that aren't taking anything. The warehouses are full. The ships are back into the port. There's nowhere to take all this. and the retailers are having trouble moving merchandise. Now it gets even worse. You've got the longshoremen, their contract is coming up, and rail workers have a big union contract coming up right now. I mean, right now, July. Are we going to see a strike? I don't know. Is it going to create a problem? It might not be as bad as you think. If we don't need the goods, what's the difference? These are the holiday goods coming in. These will be the stuff for Christmas already. You do know the stuff starts arriving now for then. If you've ever been in retailing, I was. And one of my younger life things is when I was in high school working at men's shops and things like that. Yes, I had fashion sense. And you learn when the merchandise is ordered, when it's going to come in, when you have to place the orders, and so on. It's an interesting time. When I look at silver, no, this is an area of a short covering. Why? You're oversold. Learn how to work with Bollinger Bands and slow stochastics. You hit these numbers, you're oversold, leave scraps on the table. Let the next guy have that next leg. It isn't worth the one time it's going to work to break out. Don't do it. In the copper, you still have an embedded reading. Embedded readings means to me the pros are selling this market short. When I looked at this morning, I was so happy to see this news, and the copper was up originally. By the end of the day, it gave everything up. In platinum, and I turned my eyes to platinum and palladium, I wanted to see them gain substantially. Okay, cars are going to be built, things are going to happen, people going back to work. Doesn't look like it. And you have your embedded readings still here. Same in the palladium. All you did is rally up to the resistance. So you had a market that was oversold, got to the lower Bollinger Bands back here, and has worked its way back up to the line in the sand, the 18-day average, where from that level is what the market decides what the next trend is. It doesn't decide from here. It won't decide up there. It decides against the 18-day average as to what the next trend is going to be, and it starts playing around there. It sort of fits in with thinking, hey, we got a big week coming. We're not open on Monday. World markets, they don't pay attention to July 4th, but they have to because we are the big boys when it comes to the trade markets, and they'll pay attention. In the dollar, so you got overbought, started a correction. Where do you typically go? I teach this in the full charting course. Back to the red line, the 18-day average, to try to figure out what to do. So how do you put it together? How do you learn to work with this? And you learn, hey, that's the sucker play to buy over the Bollinger Band. It's the sucker play to sell under the band. You can generally get your prices off better if that's what the pattern still says. If you lose the embedded reading, what does that mean to you? Learn to work with it. It is so simple. I put together an 8 or 13 video chapters, forgot myself. And it's so simple to learn. It will stick with you forever. That's my prediction, forever. You'll look at the band and say, wait a minute, I learned what Ira said with the momentum with that. Oh yeah, I do see how that's working. Take a look at this, educate yourself, get to the next level. I'm Ira, you have a good day. Welcome, I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.